Hi everybody, Jeff Yasteen here. When it comes to chip makers, the question of which ones to buy, it's always a complex task. In this case though, we're considering Intel versus Nvidia, and in my book, the choice is obvious. It's a no-brainer. Now, both companies offer exposure to all the biggest tech trends, artificial intelligence, the growth of the devices and sensors that we use, drone systems, factory automation, all those sorts of things. But in my view, we have to go with Nvidia hands down. Now, by way of explanation, I don't typically make a distinction between growth and value. I want both in the stocks that I choose for my subscribers in the Total Wealth Insider model portfolio for my newsletter. And in my view, the companies that we choose for our personal portfolios should have both as well, so that your money can grow without costing you too much. Those costs come in two forms. One is risk, so we don't lose a lot of money on an investment. The second one is the cost of time, because we only have limited amounts of time in which to compound our money to make it grow as we approach retirement and on into retirement itself. Now, in my view, Nvidia offers us both at a really good price. And we can see that by looking at this chart, which shows how Nvidia shares have started to outperform Intel shares over the last 5 to 6 to 7 months or so, as where Intel shares have outperformed Nvidia over the last couple of years. So if we take, for instance, Intel's coming earnings release this week, the company is expected to post 2019 profits of $4.61 a share. If we look forward to the expectations for 2020, Wall Street analysts see the chipmaker generating less than 1% growth in profits for the coming year. That's $4.64 a share, and they see that stagnating at that level again for 2021. So if we take Intel's current stock price and we divide it by that 2021 earnings estimate, we get a PE ratio of roughly 13. Now, what that number is telling us is that investors expect Intel's earnings to grow at about 13% a year. And of course, by looking at analyst profit forecasts for the company, we can see that's not really the case. So in other words, Intel investors are paying too much to own the stock, and I see the shares declining back to the mid $40 price range. On the other hand, Nvidia has an entirely different and much more positive growth story to tell. Wall Street analysts expect the chipmaker to earn $5.55 a share for 2020, and they see those profits rising 30% higher to $7.22 a share for 2021. If we divide that 2021 figure by Nvidia's current share price, we get a PE ratio of 34. In other words, investors are saying they expect the chipmaker's profits to grow at 34% a year. So with Nvidia, the current price of the stock is entirely appropriate. In fact, I think that we can argue that Nvidia deserves a bigger premium for investors to own, perhaps a PE as high as 45. So if we take that 45 number and we multiply it by the 2021 projected earnings estimate for Nvidia, that's $7.22 a share. That gives us a stock price of $325, 30% above current levels, sometime in the next 18 months. So if you're looking for Nvidia versus Intel, it's Nvidia hands down. If you like what I'm talking about, make sure to subscribe to my YouTube channel and follow me on social media. I'm Jeff Yasteen, wishing you the best of goodbyes.